I just want to say thank you to our Pay2 panelists for their in-depth discussion on the future of payments. Now, we're going to focus on mitigating risks for the fintech startups now. So launching a fintech startup is thrilling, but it definitely comes with its own set of risks. How do you ensure compliance without stifling innovation? Our next experts will guide us through the practical strategies to de-risk payment platforms. And I'm going to introduce our moderator, Amy Whittingham. She's the external audit partner at RSM Australia. So I'm going to let Amy introduce the panelists, but a huge round of applause to the panel today.
Thanks everyone, and thank you for joining us. I think in Australia's fintech industry, payment platforms are the leading innovations by offering seamless digital transaction services. However, with this innovation comes significant risks and compliance challenges, what companies need to navigate through to ensure that they do succeed. And today we'll hear from a panelist of our expert panelists who will share their strategies and actions of how we can help mitigate risks for fintech startups. So I'm going to pass you over to the panellists who will introduce themselves.
Hi. Hello. Hi everyone, my name is Quinn. I'm from Xi, Australia. So my personal background, I've been in the financial services industry for 8 years now, starting more in a regulatory compliance space because I have legal training background in advisor firm, investment fund, and then later pivoted more into the Big Four consulting space. I got into consignment work on Big Four banks and designing their compliance frameworks, designing policy and procedures, and slowly started to realize that risk cannot be talked about without operational liquidity and all sorts of like financial risk. So I taught myself data analytics, data science, and now sort of bit of doing everything. Yeah, that's me in a nutshell.
Thanks, Quinn. My name's Seamus Hodgson. I'm the Group CEO of Xi Payments Group. I work with Quinn, actually. I'm not actually a risk expert. What I'm an expert in is running businesses. So I've been working with fintechs about the past 15, 20 years. Prior to that, I was involved in financial services with sort of larger companies like Aviva. Throughout my career, risk has been central to everything that I've done. And working with an Australian fintech at the moment, risk remains central with everything that I'm doing at the moment.
Hi, good afternoon. I'm Andy Rigg. I'm the Chief Customer Officer of ASL. I've been on both sides of this question, having worked in small mutuals, large banks, fintechs, and now in a payment provider, B2B payment provider, and thought about this question from many angles. I'm also line one, and as a consequence, thinking about that before I get asked about it is forefront of my mind every day.
Okay, well, let's get started on the questions. I'm going to start probably from a holistic standpoint and ask all the panellists, what do you think are the most significant risks that a fintech startup should focus on when evaluating their risk landscape?
I'll take this question. First of all, I would like to start with that the butt governs the head, meaning that my position would form my perspective and views on this topic. Because if you ask a HR specialist, they would talk about human capital. If you talk to finance, they would talk about cash flow. But from what I can see, what comes to my desk is that a lot of risk is around security. So it's about IT security, financial security, a lot of safety net for your operations, because I think what payment platforms do not realize is that when you're transacting money, you're basically carrying money in the virtual space, and there are bad actors around who actually want to access that. If you're transferring cash, it would be out of, you imagine if you don't have any armored car to help you transfer your cash, that people would not compute, and that's unacceptable risk. But for digital transactions, people don't think about it in the same way, that you need all the safety measures in place to make sure, you keep the bad actors out of your ecosystem.
I think the advice that I would give is a little less specific. I think to me the most important thing for a fintech startup is to think about risk sort of been something that's central to the DNA of their business. You know, fintech start up to be agile, to be quick, to move fast, usually with a product or a customer proposition at the center of what they do. That's the purpose of fintechs. But I think the bit where I see it go wrong is where they don't think about risk as being central to their proposition. They don't think about risk as being something that is within the DNA of the business from startup. If you don't do that, it's incredibly difficult to inject risk thinking, risk methodology, a risk way of working later on in the business's journey. So the most important advice, I think, is think about it as something that's central to the DNA at point of startup, rather than something that you need to think about as the business has grown later on, because it will become ridiculously difficult to inject that into the business at a later date.
Fully concur with what Seamus has said there. I think I've learned the lessons of not thinking about risk early enough. It's easy to be seduced with the romance of the fintech and the problem you're solving and get carried away with where this is going to take you. The reality is, though, that business has got the very same risks that large businesses, small businesses, international businesses generally have. And so you need to stop and think, where could this all go wrong? Finance risk, have I got enough capital? Security risk, where am I vulnerable? Customer risk, what's the service I'm giving and how can I put my business at risk by offering something that's a bad service? The one that we default to naturally is how can we avoid the fraud and the takeover risk, etc., which is absolutely crucial. And one of the things I think that you do need to think about from the very beginning is the end-to-end customer journey and where you've got risk mitigants baked into that journey that they're on as they join you. Because I think that is probably where the most risk is injected into a business, is if you bring customers on board. Are you doing it securely enough?
And all really good points. And do you have any kind of specific ones where you've seen, based on your experience, of where it has gone wrong for businesses?
To Andy's point about businesses who think about their customer journey but don't think about the risk profile that injects from day one, I've seen many businesses in the UK crash and burn as a result of that. Sometimes several years down the line. So they build a business, but because they haven't injected that risk methodology into their customer journey and thought about it from day one, it builds up, you get risk, legacy risk debt within the business, and it will come back and bite you. So I've seen several businesses fold as a result of that.
One of the things I'd add, have you got people that understand risk? Yeah, I mean, I'm a growth manager, sales manager, and led product distribution. I'm not a risk manager, but I've had to become one. So risk is everywhere. It's not someone's hat. You've got to do it wherever you are in the business, but you need expertise.
Yep. Like Quinn, have you any further comments around that?
I think a more of a general question in the industry is that you need to think about your downstream and upstream, because we're all part of an ecosystem, and who you're dealing with, they also carry on part of your risk and you carry part of their risk. So it's also beyond being hacked, beyond fraud. It's also how to legitimize yourself amongst your peers so that in the future your products and the pricing for your services will be priced accordingly, and that would also help you run like more commercially in the future.
Yep, understood. And just from a risk perspective, do you, and maybe looking forward around emerging risks, is there anything specifically in the future you think is where the risk profile might change slightly?
Well, that's a big question, isn't it? I think if you list out the sort of buckets of risk in the fintech area, Andy's spoken about a few of them, so operational risk, counterparty risk, third party, all those risk sort of areas, everything is changing constantly. Everything is changing. There are no statics, I think, in all of those areas of risk. And it's complex. I don't think that you have the luxury of kind of thinking that any of those areas is going to remain the same. I go back to the point, fintechs are supposed to be fast-moving, agile businesses with a kind of unique proposition. So you need to think about risk in exactly the same way. You think about cyber risk. Cyber risk keeps me awake at night. Any business that is a tech business that is dealing with customers is massively at risk in that area. And it's an area where you need to invest and think about from day one. And it's only going to get more complex. You know, we all operate in a sector where complexity and sophistication is kind of what we sell. It's kind of what we do, and it's increasing within this sector. With that, the cyber risk just increases as well. So that's one that I'm constantly focused on, and my boards ask me to constantly focus on, because I think it's not an emerging thing, it's been there all the time, but it's growing and becoming more complex.
Yeah, absolutely. And I suppose on cyber threats, and we see that's in the news all the time around specific examples and around data privacy laws. What best practice for fintech companies can help in terms of securing sensitive customer data, but whilst staying compliant with the regulations?
Yeah, so that's the part of everyday design and how you work with your customers. So when I think about privacy and data security, I think about two elements. That's how I cut it. I mean, a legal expert could talk about it in more in-depth details, but if I'm a business owner, I think about it from the perspective of consent and security. So consent would allow me to leverage this customer consent to provide better service to them. So I can share it with my stakeholders. I can share it with my business partner. I could design more automated, seamless customer experience for them, where the other side of it is security. Because if you don't build trust and they don't trust that you will take care of their data securely, the consent slowly will wane, and then you can't actually operate. And you also breach your privacy principal obligations. So yeah, that's the two weighing factors for me.
I think it's a really interesting point you make, and it's, if I could expand it out past sort of data protection, the whole point about no pun intended, risk and reward. I think that businesses need to see risk identification, management, and mitigation actually as something that is a value creator in the business. So Quinn's just talked about, you know, getting consent from people. That puts you in the right place in terms of data protection. It also allows you to just present better product to customers as well. And I think if you think about risk in that way, that actually it is a business enabler rather than this thing that certainly when I started my career it was this thing kind of in the corner of the room that the risk team had to manage. You think about it as being a core part of the business, that if you get it right, it can be a superpower for your business. So the way I think about it is invest in risk, get it right, and actually you're creating a competitive advantage over your competitors.
I think you've got to think of it all the way through. Where is your data going? Have you done a data flow and understand where they are and which partners it flows into, and how truly close to the due diligence and strength of those partners are you? You're only as strong as your weakest link, and I think one of the failings we've seen, and I'd say we've been guilty of, is not doing enough due diligence into where that data goes. So really having a tight hold on that, critical.
Thanks. And I suppose just turning to regulation and dealing with regulators, and this is probably more to Seamus and Andy, based on your past experience. How have you found approach with regulators, and any tips for startups to deal with any interactions around that?
We're both chuckling because we both have quite a bit of experience, good and bad, with regulators in Australia, in the UK, and elsewhere. The advice I would give is sort of 2 or 3 points. One, recognize it's a license to do business. Again, no pun intended. You can't get past it. You can't ignore it. It's there. You might disagree with some of it, but actually, regulators are genuinely trying to do the right thing. So you've almost got to embrace it. You know, the businesses that I see, again, who run into trouble are those who try and compartmentalize it and sort of ignore it. You've got to embrace it. You've got to engage and get a narrative and a dialogue. Joining industry bodies, I think, helps, particularly from a startup perspective. You can get a sort of different view about regulation. Your voice can be heard with regulators as well. Don't ignore it. You know, recognize that it is there, it's not going away, understand it, engage with regulators positively when asked. So consultations, for instance, engage in those. They are genuinely listening to industry. But don't ignore it, it's a core part of what you do. If you're involved in finance, you're involved in a regulated sector, so you have to pay attention to it all the time.
Spend a lot of time with regulators.
Yeah.
I am unique, probably, in being one of the few people who've managed to get a banking license and managed to give one back. So I spend a lot of time doing that. But my advice would be incredibly transparent and incredibly proactive. It's so easy to not think something matters. Even if you think it doesn't, tell them anyway. So I would say become the friend rather than see them as the enemy. The other thing is to understand it really, really well, because there is so much of it and so much of it changing all the time that you've got to be across it so that you're not feeling or leaving yourself vulnerable in any area. But my general advice is really embrace it, bring it closer, because I think that way it's a better way of dealing with it.
I think it's an important point, actually, in terms of really understanding the purpose behind the rules, the regulations that are in place. We live in an era of sort of principle-based regulation where sometimes interpretation is key. So spending the time and effort, even at startup stage, of understanding what is pertinent and the purpose behind that regulation as well, I think is so important. Principles-based regulation is an invitation to get things wrong if you don't really understand the purpose behind it. I think that's so important for startups.
And the language you use, I've got to do this because of the regulator. Nope, you don't. You're doing this to protect your business or to protect your customer. The regulator is just there to make sure you're doing it well.
Absolutely. And mentioned that we've got a few fellow Brits here, so I know that Seamus works, does actually reside in the UK, so based on the kind of wealth of experience, I think it'd be good to kind of understand the risk landscape in the UK versus Australia, and how, if you see any kind of key differences between the two.
I don't think there's any difference at all. I really don't. I think that there's so much commonality between Australia and the UK, but actually, you know, the other business that I'm CEO of operates in Singapore, in Hong Kong, in the US, and in Europe, and I don't think, if you think about the sort of categories of risk, I don't think they're any different in the UK and Australia. I think from a regulatory risk perspective, the UK might be a few years ahead of where Australia is, but I think there's commonality across the piece. I don't think there's any difference in terms of those risk categories at all. No real difference at all. I think risk, you know, there's more difference. It depends on which sector you're in or your type of business. So there might be a difference in balance from operational risk, commercial risk, regulatory risk. I don't really see a difference in different jurisdictions. I think it's more business types and sectors.
Yeah.
Absolutely. The risk is risk wherever you are in the world, and whether you're in a large business or a small business, they're the same risks. The question is where you are in the journey to mitigate it, or where the regulator is in their current stage of thinking about how to manage it. So that goes back to the previous question of being across where you are at the time. But I would look to the UK for what's going to happen, only because they seem to be, I'd say, 2 or 3 years ahead, and I've got friends that are working in you know, banks over there, and I hear them talking about the things that we're talking about here. So I don't think there's a lot of difference.
Just to add to that, I think a lot of times regulation comes after business experiences. So you might not be a regulatory expert, and then you pull out a legislation or regulatory guide, and you be like, okay, they're asking for me to do stuff I'm already doing for my everyday business risk mitigation. I am already doing AML, CTF, KYC to make sure that like criminal syndicates not going to use my business to launder money. I am using fraud protection so that I don't bury the chargeback losses and the direct debit claim losses. I am already doing underwriting because I want to make sure that when I'm putting my money forward before it's settled, when I'm clearing a fund, I want to make sure I am protected. So like all of those regulations kind of comes in and summarize all of the common issues that you are having with your industry peers, but it's one of the same. It's part of the business, part of doing good business, and regulators just want to know that you're taking care of your customers.
Absolutely. And fraud continues to be a major concern for fintech. So I suppose from a balance perspective, how do you think companies strike a balance between providing a seamless experience and being able to grow, but also making sure that they're implementing strong fraud prevention measures as well? Quinn?
Yeah, I might jump into that one. I was in fraud, literally just writing SQL code and picking up problematic profile for a whole year. So the way I think about it is, in an ideal world, everybody's going to have universal ID matched with facial biometrics, matched with multiple factor authentication, matched with machine learning, risk score, but there is cost and benefit. You need to think about the friction you're going to add to your customer journey. Is it going to be worth it? And then to prevent it, you also need to think about it from a fraudster's perspective, return of investment. If I'm a fraudster, I am identifying this business. Every business has weaker links. Every business have gaps in their controls. But how much effort does the fraudster need to exploit my gap, and how much investment, return of their investment that they're going to get? And think about it from their perspective. Okay, they're probably not going to put in all those method to get through, and they will go away. And then for me, that is a sufficient fraud prevention method, and you need to scale it up or down based on your business size and the stage you're in. Yeah.
I actually think we live in a really quite a wonderful time in terms of fraud prevention. And it might sound odd. I remember when things like ID and V were done with paper. Underwriting was a 2-week process to make a loan. We live in a fantastic time. There are businesses out there, many of them actually at this conference, who provide ID and V, KYC, anti-fraud services that we couldn't even think about 5 years ago. So my advice would be look to third parties. Look to, in addition to what Quinn has said, look to third parties. There are small businesses out there that can provide you with services that will transform your approach to fraud in a way that wasn't available 5 years ago. So I think we're in a really good space. And fraudsters will always be that step ahead. So you've always got to be vigilant. You've always got to be thinking about what the next step is, what the gaps are, where fraudsters are going to go next. But I think we're in this really interesting space where there are these small businesses, startups that can really help in this space. So look to third parties. Don't try and build everything yourself.
Go slowly, I'd say. So when you launch, you're probably at your most vulnerable. Most people are looking to attack at that point. And when we started some of the neobank journey at the beginning, and I go back to this, I spent time in the UK with the sort of emerging banks at the time, the Starlings and of this world, and the Monzos of this world, and I could not believe the number of attacks they got in the first few weeks. We're talking hundreds of thousands of people trying to open an account fraudulently. So I sort of came away from that thinking, we've got a big problem. And rightly, when we launched our neobank, sure enough, massive attack. But we were ready and did it very slowly as a consequence. So my advice would be don't rush out there with vulnerability. You need to get it right before you go to market. So that would be mine. But you can't underestimate making sure you know who those customers are. I think it's the critical process of the whole thing and where most fraud starts.
Really good point. I think we've got time for one more question. So I suppose a lot of businesses are talking about digitalisation and transformation, but when we're kind of talking about start-up to scale-up, at what point do you think a fintech company should seriously prioritise these efforts to ensure that you're maintaining a competitive advantage?
If you can, from day one, right? We are Fintechs. That's sort of within the name. There's a balance. I was having a conversation with actually the founder, one of the founders of Zai, yesterday, and he was reflecting on sort of the principles of some startups where you're doing a lot of stuff behind the scenes initially that is manual before you either have the funding or the capability to digitize. Digitization brings efficiencies, it brings a better customer experience, it brings better product delivery. So if you have the luxury, do it from day one. Because, again, retrofitting partway through the journey is more expensive and difficult. Not everybody has that luxury, but I would do it as soon as you possibly can. The whole process of digitization should bring benefits. So if you can afford to do it as soon as you can.
Oh, yes. Well, definitely. And then you could start with different elements in your operations. You don't have to do it all at once. And then you could also start with like a limited testing environment, just control your users, control the whole payment flow. You could just scale it up or down as you wish, but like digitize as soon as you can, like Seamus said.
I think you've got to build for scale. So be ambitious in what you're building. The trick is to only pay for what you use at the time. It's a hard balance saying, I've got something that can scale with me, but I'm only paying for the first bit. So go hard into negotiation. I hope none of my customers are listening. In terms of paying slower with a rapid rise as you get going. And the partners you choose, I think this is one of the hardest things that FinTech has to face. Who is the appropriate partner that is most aligned to your business culturally and who wants to enable you to win the best? So that's where I think you've got a key opportunity.
Okay, fabulous. And that was probably all for the main questions, but thanks so much for your time today. Some really key takeaway points there, especially starting the risk early, understanding your regulations, and making sure you've got the fraud piece in place as well. So, thank you so much.
Thanks very much. Cheers.